All right, just as the holiday season is about to rev up, we see Chris at Ice on Main, right? Retail sales are cooling down. So Mike Giordana with Williams Wealth Management is here now for Mike on the Money segment. So Mike, in today's report, it shows the first decline since March.
Right.
So is that kind of a harbinger of what's ahead for the holiday season?
It's hard to say. I mean, you could definitely feel there's some cooling in terms of retail sales, but we've been spending so much money collectively as Americans that you had to have some cooling at some point. And as Gabby mentioned in that last segment, the parts of the economy that cooled down the most were cars and furniture. Definitely with cars, you're financing those things, so higher interest rates, that's a problem for people buying cars, and a lot of people also finance their furniture. So those two types of things were basically a lot of what weighed on that report. Most people don't get those as Christmas gifts. If somebody's giving out cars as Christmas gifts, I want to be one of your kids. Right?
Those are nice Lexus commercials that we see, though, with the big bow on
Yes.
top. It's a kind of a nice idea. Okay, so the slowdown in consumer spending, even as you said, furniture, gasoline, cars, does that match kind of what's happening across the economy?
It does. We're seeing a lot of different data that's showing kind of a slowdown. We had a slower jobs report a couple of weeks ago, and then we've had a bunch of different inflation reports that have showed cooling. And it's that kind of cooling that is collectively saying, yes, the economy is slowing down.
Then we look at stocks each day. We report that at the end of the broadcast. And there are some days that I haven't gotten a little warning on my phone.
Right.
And it's like yesterday, up 400 and something. Why are the markets surging when everything else seems to be slowing down?
The markets are always trying to look ahead. And so what they're looking ahead to right now, Jane, is the fact that they see inflation coming down, and that is helping them bring in interest rates down. And then they go, the Fed's probably done. And if the Fed's done, then that can help interest rates keep falling further. And it also gives the markets the opportunity that if somehow we fall off a cliff in terms of growth and we really have a slowdown, then the Fed's there to start cutting rates to stimulate the economy again. So we're right there in that perfect place right now where we have the slowing to bring down inflation, get us back on track, and it hasn't fallen off a cliff yet. And so that's kind of what the markets are cheering right now.
Okay, and I'm assuming that a lot of your clients are sitting down with you right now, and they're making those year-end decisions. How many, where do I need to reinvest, or how much do I need to be giving away? What's happening in terms of the repositioning at the end of the year?
Yeah, this is a very tricky time. I mean, COVID has been a wild scene, both down, up, down, and right now we're in a weird spot here where the Fed is sucking money out of the system. They're trying to cool the economy. It's really, really hard for them to perfectly cool the economy, but so far they have. And so sometimes you get people that are way too bullish, and then you can have people thinking we're definitely headed for a recession. You get too bearish. The best thing to do right here is just maintain your balance. Whatever your speed is that you like to drive your investments, stay at that. Don't get too crazy one way or the other because, yes, we have had a soft landing to this point, and it may continue, but we could also potentially tip this thing into a recession because it's just so difficult for the Fed to orchestrate this thing perfectly.
Yeah, and quickly, that back to conversations we've had for a while.
Right.
That's what the Fed is trying to do, is avoid recession, and so far you feel comfortable about that?
So far they've been able to do it. We just haven't gotten completely through the process yet. We have no idea what all the lagged effects are to this point. There's definitely a lot of headwinds on the consumer, and that's why they're spending a little bit less right now. But to this point, it's worked out, but can't say for certain it will.
We'll breathe easy, but not a complete sigh of relief.
Yes, just stay balanced, you'll be okay.
Mike Giordana with Williams Wealth Management. Always great to have you with us.
You bet.
We'll be right back.